Good afternoon. I think we are waiting for a few more people, but because of time, we want to be punctual. So we're going to start, and hopefully people can catch up with the recording later. So welcome to our second webinar on financial accountability. I forgot last week to introduce myself, so just for those people joining or watching that don't know me, my name is Becca Martin and I am a finance manager with Viva Africa. So I have about 10 years experience working in charity and NGO finance, and I've been with Viva Africa for about 4 years now. So the second topic that we're going to look at today is keeping track of money. And there are 3 standards which we're going to, and there'll be a chance to ask. First of all, why is keeping money important? And I think it's quite sure that all of the income and expenditure that we receive and spend, we know where it's going and the purposes of the expenditure, and to make sure that the money is safe and we're spending it on meeting the objectives that it was planned for. So the first standard that we're looking at is this: a valid supporting document is obtained for every transaction, securely filed and stored for the minimum period required. So a supporting document is exactly what it says. It's a document that supports the transaction. It shows evidence that the transaction actually took place and that it was for the amount of money that it is labelled on the document. So it's a form of evidence that shows that that it took place, and that prevents against misuse of funds. But for example, if somebody had put in the accounts that a transaction took place but it hadn't actually, if there's no documentation to support it, you can't sort of prove that it did happen. So first of all, helps support against errors in accounting. If you can look back and see exactly what took place, you know if there's been any mistakes in data entry. So all transactions, all financial transactions should have some sort of supporting document. And what that looks like will be different depending on the transaction. So it could be an invoice, which would be stamped, paid, or it could be a receipt that's given when you make a purchase in a shop, for example. It could be a paying in deposit slip if you're paying money into the bank, or things like that. So all transactions will have some form of documentation. If you have problems coming up with documentation, for example, if you're making cash transactions to somebody that can't provide a receipt, you should consider having some form of documentation. An acknowledgement form where you have a headed form, and the person receiving the money will sign and date that and acknowledge that they've received this amount of money. That will protect your staff so that they can prove the money was given, and will protect your resources in your organization if people are saying they gave money to someone and they hadn't. So it would just help it, along the way, protect your records. Another possibility, if you're considering documentation where you can't provide a receipt, even if you have for example, taking photographs of giving people assets or that kind of thing, that you would have some evidence of that transaction having taken place. The more detail, the better, but at a very basic level, that might be the best you can do. The length of time, the second part of that standard, it's just worth noting the sheet that we shared this morning had a link to a document that gave information about legal requirements in different countries, because depending on the country that you're in, the length of time that you're required to keep documentation for will be different. So you can refer to that, or you can refer to your own country's governance of how long to keep records for. But as I said, I can't tell you how long that should be because it will be different in each country. But there are different rules as to how long you are obliged to keep documentation for. So you need to check up on that for your own country, and also be aware that there are different laws around electronic storage, so storing things on computers, etc. So you need to factor that in when finding out how long you're supposed to keep documentation for. Also consider where you're storing your paperwork. It should be kept securely, so in a locked cupboard preferably, or again, if digital, you need to consider how safe your digital storage is. And it should be kept in an organized manner, so that if you have to follow a paper trail for any reason, like during an audit, you should be able to cross-reference all the documentation to say that this refers to this income was received and then it was paid in, and etc. So you can see the whole trail the whole way through. So we'll move on to the second standard. And that is the next slide, thank you. There is a cash book where money, cash, cheques and wire transfers and other resources received and disbursed are recorded, with a record of the date, description and amount of every transaction. The cash book is reconciled every month. So presumably most organizations who are joining or watching will have something in place already, some system of keeping records. So I don't want to presume that you're starting from the very beginning, but it's just worth noting that the size of the organization will depend on the level of bookkeeping that you may do. So as for a very small organization, it might be a very simple system of cash books where you just have one cash book for each bank account or cash account, and all of the income and then expenditure is recorded there. So it could be a very simple layout. As you get bigger, as you have more income and expenditure, and particularly if you have employees involved, then that will need to be a bit more of a detailed system where you'd have your payroll, your wages book in terms of bookkeeping. So most organizations, I imagine, would meet that standard quite easily. But the key point there that I want to make is that last sentence, that the cash book is reconciled every month. I really can't emphasize enough how important it is for your records to be reconciled regularly. So that would be a case of making sure cash counts were done, and checking your amounts of cash in the cash that you're holding and also in your bank accounts, that every record of income and expenditure is accounted for in your records. So really matching up your own records against what you have in your source documents, so your bank statements or your petty cash records. This really just makes sure that you're not that you haven't missed entry of anything, and that there aren't any errors in your record keeping. Sometimes it's easy to write a number, mistype a number or write the wrong way round, and it's quite easy to not notice that unless you're checking whether your records match the amounts of funds that you have. Okay, so I think we'll move on to the third standard. So the third standard is a chart of accounts is produced, which is used consistently in the accounting records and budgets. So again, hopefully, if you have a bookkeeping system set up already, you will probably have a chart of accounts of some kind. But sometimes it's worth reviewing whether you have everything you need in your chart of accounts and whether it is doing the job that you require of it. So really a chart of accounts is just a list of all of your categories, I suppose, that you use within your finance and reporting. So it would be, for example, you might have administration costs, personnel costs, vehicle costs, etc. And the chart of accounts would be organized into 4 main categories, which would be income, expenditure, assets, and liabilities. So assets would be things that you own, and liabilities would be things that you owe, that you need to pay. So these would then be used consistently when you're reporting and when you're budgeting. And the chart of accounts, you would have a sort of list that you keep available for people to consult, and that would include descriptions of what each account is used for, and also include a logical coding numbering system. So you might have, for example, all of your income would begin with 1, and so your income codes would be 1,000 for membership fees, 1,001 for grants, or something like that. So it would be logically numbered so that it would be easy for people to sort of use it consistently. We are going to cover sort of budgeting and planning in a later topic, so we will go further into this, but it's worth noting that if you have different donors or different grants that you have to apply for, you have to submit a budget when applying. Sometimes different donors will require a certain template to be used, and so you may have to use a template that doesn't kind of correspond with your own chart of accounts. So in that case, you would need to make sure that you map out your donor budget to correspond with your own chart of accounts, so that when you're keeping records, you will be able to report both to your donors, but also to keep consistency in your own chart of accounts. So that might look like several of your donor budget lines might correspond to one of your own lines in your chart of accounts, but you'd need to make sure of a system where you are able to report in both formats. So with that, we come to the end of the standards for today. It's quite a short one. So that's the 3 standards within that topic, keeping track of money. I'm not sure how many people have been able to join by now, but I wonder if anybody has any questions. or comments that they would like to cover on this topic?
Becca, allow me to ask a question.
Sure.
If you've got lots of different pieces of paper for the same transaction, is there a way to keep them nicely ordered? How do you make sure things don't get lost?
Yeah, that's a good question, and I think I'm not sure if I will answer the only answer, if that makes sense. There might be other ways that people find, but I would say in terms of what the questions I would ask myself is, first of all, is all of the paperwork actually relevant to the financial transaction? I think that occasionally in record keeping, you might find that people are submitting paperwork that's actually relevant to another part of the activity, which might be important to store somewhere, but might not be relevant to the financial transaction, and in which case you would consider whether you want to keep all of your paperwork in one place or whether some parts of it would be better kept elsewhere, if that makes sense. I'm not sure if if that's true for everybody, but I know, for example, you might have say you might be paying money for a child protection case, and within that documentation, people might submit sort of a report on the child, which might not be best kept with your finance documentation because of sort of confidentiality reasons. So there you might consider sort of cross-referencing your documentation. So in your finance paperwork, you might give a reference number to your child protection report, which is kept in a different place, if that makes sense. The other thing to consider is, again, is sort of your paper trail, I suppose. So during a financial transaction, there might be a number of things along the way where you need documentation, and what you don't want, if you can help it, is to have multiple copies of paperwork, which is sometimes unavoidable because you have, different signatures, different dates, and that sort of thing. So if you're very forward thinking, it would be good to sort of develop your system so that you're minimizing the amount of times that you need to print documentation out, for example, or, so leave extra spaces for people to sign at different points if that's relevant, if that is relevant. And I think, the other thing to consider there is when you're submitting paperwork, is just to make sure that all of it is relevant, relating to the transaction that's taken place. I don't know if anybody else wants to add in thoughts on that question or their own experiences.
People can raise their hand, but while they are, there's two questions in the chat from David Sigeni.
Okay.
Question number one: some places only have cash sale receipts. They don't have headed receipts. And they would normally stamp and write their contact number on the receipt. Is that acceptable?
Yes, so I can answer that one first, maybe, and then we can look at the second. I would say the main principle to consider with documentation is it kind of permissible as evidence, I suppose. So if you were presenting this to somebody, would they be able to say without a doubt that it came from the person either receiving the money or giving the services, if that makes sense? So the example that you've suggested, I would say, somebody can correct me if I'm wrong, that would be acceptable in terms of if they have a stamp and writing their contact number, they are traceable. You could call that person and say, did you provide this, this service, these goods to this person? And they would be able to confirm that. The issue, of course, is that the easier it is to, the harder that it is to tell if a receipt is genuine, the more risk there is of sort of forgery having taken place or that sort of thing. So wherever possible, you want the sort of either computerized receipts or a receipt duplicate book where you can tell that the records can correspond with each other. Obviously, you would hope that most businesses or organizations that you're dealing with will also be keeping their own records, their financial systems up to date. But of course, you can't always guarantee that. And so you just have to do the best that you can to sort of be able to prove beyond reasonable doubt that transaction is real, if that makes sense. So yeah, I would say you should take as many measures as possible to ensure that it is traceable and sort of beyond doubt, if that makes sense. Then the second question there is, do we have a specific person supposed to write on those receipts, or anyone can acknowledge the receipt of the money? For example, you go to a school to pay fees, the bursar is not there, but the head teacher receives the funds. Is that allowed? To be honest, I think that would more depend on the policies of the school or the person providing the receipts. If you have a financial policy within your organization, it's likely that you will have designated certain people able to receive funds or, that sort of thing. So it would be on the side of the school, for example, in that example that you've provided. If the school are happy to provide a receipt and have access to that, I think from your side it would be acceptable, I suppose, as long as it was somebody who was employed by that school, for example. But I would say that from the school's side, their policy probably would be that only the bursar is the one who receives the income. So I don't know if that entirely answers your question, but if you have been given a receipt by a school, that is a legal document from your point of view. So if they haven't followed their own policy, then that's their own consideration, would be my response. But again, somebody could come back with if they don't agree with that.
We've just got a couple of minutes left. Jackie, you have a question, please go ahead.
Yes, thank you, Becca. You mentioned cash books, and I was wondering, where do we record receivables that are non-cash?
That's a good question. Thanks, Jackie. So again, for a larger organization, you would be looking at having other records where you keep, for example, a stock book or also an asset register. Particularly, obviously, stock would also come through sort of financial records in terms of when you purchase anything. But from after you've purchased it, you might it would become an asset rather than part of your finance. So we probably haven't got too much time to go into a lot of detail, but for any organization that does have additional assets that are not actual cash, you should have a system of reporting and recording that. So you would have your stock book at a very basic level would just again be your sort of incoming stock and outgoing stock, where you record what you have purchased, and then as that is used, you would report that and have proper authorization procedures there for signing out and reporting on the use of that. The other thing to note there would be within your policy, what's your system for certain types of stock, whether you would have sort of impressed system where you're using the levels of stock that you have left to assess whether you need more, stationery, for example. If you go below 1,000 notebooks, do you need to order more? Or, that was just an example, but that should be in your consideration for your policy there. Hopefully that answered your question, Jackie.
Okay, Jackie says yes.
I think we
are about, even if we don't run out of time, it is our time. So
yep.
David will get a private answer. Thank you so much for joining. The recording will go on the Crane YouTube for revision, and please, anyone who wants assistance with their financial management or their finance policies, we will connect you to somebody for that support. Otherwise, thank you very much for joining us. Have a good week, and we will do more finance at 3 o'clock next week. Thank you, Becca.
Thank you very much, everybody.